Mark, great to have you here. Happy holidays.
Hey, Frank.
All right, let's start off with a little bit of news, Mark. I mean, some news out today. Elon Musk sent a letter to employees say, don't worry about the stock market craziness, asking for a little help to deliver cars before year end. The last one's really caught my ear. He said to demonstrate continued excellence going forward. So my question for you is it the quality of those Tesla vehicles, especially in the consumer side? Is that what's been pushing the stock higher?
Well, I think, overall, there's a large retail component of Tesla stock. And you've seen literally over the last month or so, a lot of retail buyers buying into the stock. I think at the end of the day, when you look at Tesla's performance and the reasons that the stock's been down, yes, you have that bucket of is Elon distracted with his focus on Twitter? But then there's the other bucket that says, they're starting to experience potentially for the first time in their young company's life, demand problem, because you have established automakers that are bringing in new models. You have the economy slowing. Right now, you can literally get on a website and order a Tesla and have one in a few days. They've actually doubled the incentives offering to consumers to take a vehicle by the end of the year. So, when you look at that, this company has been, valued by investors as a battery, a software and technology company. That plus their growth has really, given them a very high multiple. I think now investors are waking up and saying, hey, they are also a car company and have to compete in a slowing economy.
All right, so you're a former Big Three CEO. I think you have a great take on this whole landscape of the area. You mentioned incentives. So coming up next year, starting in January, the Tesla Model Y and Model 3 will be eligible for tax credits from the Inflation Reduction Act. The Model Y and Model 3 are already about half of the consumer EV market. So is this a cure for all of Tesla's problems, these EV credits and also higher gas prices, which we're all expecting next year?
Well, no, I don't think it's a cure-all for a couple of reasons. One is if you look at Tesla plus the other automakers that are selling EVs, they've taken significant price increases over the past 9 months because you're seeing some of the input costs like cobalt, lithium, nickel, things of that nature really spike up. And literally, if you look at some of Tesla's price increases, it's negated the incentive that they're going to be eligible for next year. That being said, they are going to be eligible for it versus some others. But overall, they're going to have to continue to come out with great product, but continue to drive efficiencies because, ultimately they have to drive continued demand for their products. And you're seeing that slow a bit. So it's going to raise the question, are they going to have to do some marketing at some point, which they've had literally zero costs on that, but they're going to have to continue to drive the quality of their vehicles, which, have had some issues and recalls. They're the number 2 volume manufacturer of recalls this year. So they have some issues to do as they continue to grow and scale.
Mark, I want to ask you a little bit about Tesla management and Elon Musk. There was an article out from The Verge this morning. The headline was "The Vibes Are Off at Tesla," talking about layoffs, lawsuits, delays, Twitter chaos, and of course the stock saying the stock is in free fall, though it is up pretty dramatically this morning. How concerned would you be about Elon Musk being distracted in that litany of issues?
Well, Julie, when you look at running a car company, it is a 24/7 endeavor. And, when you look at Elon and the other balls he has in the air, including Twitter, you got to ask yourself, when he's competing against other automakers who their CEOs are 100% focused on the business, are they getting the best out of that? I think within the organization, for their people, listen, many of them come to work at Tesla because of Elon. So that will still be there as he's in charge of the business. But he's facing some mundane problems that, all the other automakers face around. You have to right-size the business when the top line gets tough during an economic slowdown. And he's going to have to look at, retaining his best workers, because if you look at the stock performance, a lot of the execs, their compensation is in equity. And with the performance this year, a lot of those execs are probably looking at their equity compensation and saying,